Okay, welcome everyone. Hopefully you can all hear me. I'm Richard Jackson, not Leonie Barry as it says probably at the top of your screen, and I'll properly introduce today's event in a little while. But before we officially kick off, I'm just going to run through some housekeeping points to ensure everyone can hear the webinar and post questions, etc. Hopefully most of you listening in will be via your computer speakers or headset. This is absolutely fine, as we're not going to be asking you to feedback or join in via the teleconference. However, if for some reason you have an issue with listening in on your computer, you can listen in via the phone. We still have a few people logging in, so I'll just leave this slide up a little longer. Okay, well, I can see from here that most people seem to be able to hear fine, so let's continue. During today's webinar, you may have questions or for our presenters. If you do, please send them in at any point during today's event via the chat or Q&A boxes by following the instructions on the screen. We have allocated 15 minutes at the end for the Q&A session, during which we'll do our best to answer all those questions that we receive. And again, if you're having any technical difficulties at this point, please use the chat box. And finally, we'll also provide an audio-visual recording of the webinar, including the Q&A session and accompanying presentations following the event. We will email you a link, or you can find it online at juststyle.com/webinars. And as I mentioned earlier, you can also follow highlights of the event and comment and ask questions using Twitter with the hashtag #JSEvent. Right, I've been given the nod from their technical people that everyone is ready and online, so let's begin. I'm Richard Jackson, the CEO of Arrock Limited and the publisher of Just Style, and we'll be chairing today's webinar entitled Sourcing in China, What's the Alternative? I'm delighted to be joined by Leonie Barry, Managing Editor of Just Style, who will be presenting the first of today's sessions, looking at why China dominates overall in apparel sourcing and the competitiveness of alternative locations. I'm also delighted to welcome Kurt Cavano, the CEO of TradeCard, the cloud-based platform that connects apparel brands and retailers to their trading partners to give visibility across the supply chain. TradeCard is sponsoring today's event, and Kurt will be talking later about key considerations to make when seeking an alternative to China. And finally, I'm also very pleased to welcome Mike Flanagan, CEO of garment industry consultancy ClothSource, which provides data and training to help firms improve their sourcing skills. Mike has produced a special report in conjunction with Just Style called Is There an Alternative to China as the Dominant Location for Apparel Sourcing, which forms the starting point of today's discussions. Mike will be available during the Q&A session, and we're also pleased to be able to offer everyone listening today the chance to buy the report at a discounted price, details of which will follow the event. I'm now going to Leonie Barry, who will begin today's webinar by looking at why China dominates in apparel sourcing and what other locations are biting at its heels. Over to you, Leonie.
Thank you, and hello. One of the questions we're most often asked here at Just Style is where's the next China? China's getting expensive, it's losing its competitive edge, but where else is there to go, they want to know. Now, it's not a new question. After all, firms have long been advised not to put all their sourcing eggs into one basket and to minimize risks by working with a range of suppliers. But it has gained a new sense of urgency as clothing brands and retailers come under increasing pressure to maintain their profit margins against a backdrop of rising product costs and falling sales. For the first time in recent memory, the cost of making clothes is soaring, and not to put too fine a point on it, there's real uncertainty out there. Indeed, we've spent the past month or so questioning industry executives about the challenges they think clothing firms will face in the year ahead, and China's one of their worries. Here are a few of the comments that crop up in our annual management briefing, which is published today and looks at apparel industry issues to watch in 2012. They neatly sum up some of the concerns about China. If you asked us 3 years ago where we want to expand, we would have said China, was one of the comments. But now this isn't the case. China's no longer the lowest cost country, and costs are rising every year. Another said, 2012 may become the year where the cost advantage of manufacturing apparel and textile products in China becomes irrelevant. The concern is how much other locations can absorb business moving out of China. After years of being able to deliver consistently low manufacturing costs, sourcing organizations are continuing to face rising costs, thanks in large part to rising wages in China, another comment came in. Or how about finding new factories in China is as hard as it's ever been. And finally, inflation in key apparel producing countries such as China will put pressure on the supply chain. But where else is there to go to produce garments? Where indeed? Anyone hoping that today we're going to lift the lid on a new low-cost sourcing hotspot is going to be disappointed, because the evidence still suggests China, the world's leading apparel supplier, will continue to play a key role in the sourcing strategies of most companies. Yes, there are lower cost countries. Bangladesh and Laos, for example, although poor infrastructure here will weigh on lead times. If fast turnaround is your main aim, then suppliers close to your customers might be the answer, like Nicaragua to the US and Poland to the EU. Or maybe a country specializing in a particular product, like Sri Lanka and lingerie, is the answer to your problems. But through good times and bad, China's share of the world apparel market has soared, as this slide shows. Indeed, ClothesSource's new report, Is There an Alternative to China as the Dominant Location for Apparel Sourcing, shows China's share of rich country apparel imports reached 46.6% in the third quarter of 2011. This is higher than China has ever achieved in any previous full year. And with good reason. With its reputation for convenience, quality, reliability and flexibility, and of course the ability to make a huge range of products, the balance is clearly in China's favour. Now Kurt's going to talk in more detail about things to look at when making a sourcing decision, but in general, the criteria for deciding a manufacturing location involve a balance between cost, reliability, for example, does it offer on-time performance and delivery, political stability and local infrastructure, flexibility for smaller orders and quick changes of capacity, availability of raw materials, payment terms and compliance. Against this backdrop, China clearly ticks more boxes than anywhere else. Perhaps the only area it really falls short of is price, but even here the perception it's no longer competitive may well be due to steps the government took to protect industry jobs, which saw Chinese clothing prices fall sharply in 2008 and 2009. Yes, this began to revert in 2010, largely due to pressure for higher wages, but the evidence suggests that between 2009 and 2011, average annual inflation in Chinese garment prices on arrival in the US broadly tracked inflation in US garment imports overall. China costs might be rising, but so are those from other suppliers too. Western buyers are now paying more for their garments wherever they're made, thanks to the soaring price of raw materials like cotton, which, as we all know, went through the roof to reach an all-time high in March last year, as well as things like higher wages and overheads. Indeed, some of the minimum wage rises planned for this year include up to 40% hikes in Jordan and Thailand, 29% in Vietnam, and increases of between 9% and 23% in China. ClothesSource calculates the price of made-in-China garments shipped to the US in October was around 15% higher than the year before. But at the same time, the average price from all suppliers rose by 18.6%, which suggests China's becoming more, not less, competitive. As its report says, whichever way you look at it, America bought its clothes from China 8% cheaper than from the rest of the world in 2010. Now China's 11% cheaper. But there are other factors that also come into play that not only explain why China continues to dominate when it comes to apparel sourcing overall, but is also likely to continue to do so for the next 20 years. Where else has the size and skill of the Chinese workforce, the manufacturing capacity, and the infrastructure for trim and fabric supply? As well as having the world's largest population and workforce, apparel output from China has doubled since 2005 thanks to productivity programs. China has also accounted for 60 to 75% of the world's investment in spinning, knitting and weaving technology each year since 2001, which gives it another edge since most garment supplying countries can't compete when it comes to upstream textile supply. The US and EU have also adapted their trade rules to allow a growing number of importers to use Chinese raw materials and still gain duty-free access. And above all, Chinese competitiveness sets it apart from the rest. Its infrastructure allows every aspect of a garment's production to be carried out efficiently, from sourcing accessories and raw materials through to efficient transportation for finished goods and fast, efficient customs control. Saying all that, companies obviously have choices when it comes to making sourcing decisions, and the advice is always to spread sourcing risk across a number of baskets. China's clearly not the only place to source from, and indeed it does not dominate sourcing for every major buying country in every product category. As this snapshot shows, for 10 categories of garments imported into the US, China dominates in 6, but that still leaves 4 where it doesn't lead. And changes are taking place all the time. Interviews carried out by McKinsey & Company claim 86% of chief purchasing officers in European and US apparel companies are in favour of moving some of their sourcing away from China, largely due to worries about cost and government plans to double wages under the 12th five-year plan. Their survey also found 54% of CPOs plan to cut their sourcing activities in China by up to 10% over the next 5 years. And 32% are aiming to cut their share of sourcing in China by more than 10%. So what are the alternatives? The perfect supply country varies between buyers, type of product, and even individual projects. And Clothes Source estimates that by the end of this decade, around 40 countries will compete in some sector of the apparel market with China. As we said earlier, China accounts for just under half of rich country apparel imports, which still leaves more than 50% up for grabs. Since the lifting of quotas at the beginning of 2005, China's growth has been surpassed by both Nicaragua and Vietnam, albeit from smaller bases. Other fast-growing clothing suppliers to the US, EU and Japan are listed here. Vietnam in particular is seen as the clear winner when it comes to taking trade flows away from China. Its textile and garment exports jumped 38% last year to reach a record of $15.6 billion. It's the second largest supplier of textiles and apparel to the US. It's one of the fastest growing sources of knitwear and tailoring, and has also been expanding its reach into yarns and fabrics. But it is hampered by low levels of productivity, has to import most of its cotton and accessories, and offers limited design input. Minimum wages rose by up to one-third in October to help workers cope with rising inflation and to reduce the likelihood of strikes. Another destination consistently mentioned is Bangladesh, which has seen its growth soar since the recession. Its strengths include competitive prices, available capacities. Bangladesh, for example, has around 5,000 ready-made garment factories compared with Vietnam's 2,000 and 260 in Cambodia. And the broadening of EU GSP rules so that products from Bangladesh benefit from duty-free access wherever their raw materials originate, including China. But problems here include the lack of infrastructure, with congested roads and unreliable power supplies adding to garment lead times, and its low wages increasingly attract accusations of poverty pay. Cambodia and neighbouring Laos are also worth keeping an eye on. For Cambodia, sales growth to Japan and the EU has offset falling US volumes, while Laos remains a low-cost option in the region. Cambodia's main strength is in knitwear, while Laos is strong in knitwear, tops, dresses, trousers and skirts. 52 new factories were registered last year in Cambodia. Like Bangladesh, Cambodia and Laos are classed as least developed countries and benefit from origin-free, duty-free access to the EU and Japan. And some countries are also gaining sales thanks to their ability to offer low-cost production and close proximity to their main customers, helping to drive down turnaround time. This includes Nicaragua to the US and Poland to the EU. But it's important to remember there will always be new sourcing opportunities. The question is whether it's the right opportunity for you. And coming up next, Kurt will offer some advice to help you make that decision.
Hello? Well, thank you, Leonie. Great job, and really appreciate the opportunity to speak today. As we get the slides up here, I want to say the report, having taken a look at it, really does do a great job of summarizing what's going on in the industry and the whole kind of look to the rise of a lot of these different countries. So I really think it's a great report.
Sorry, I'm just going to interrupt there because it looks as if we're having a few technical problems. Kurt is actually joining us from another continent, and we're doing our best to re-establish contact with him. I think we can now hand over to Kurt again. Thank you.
Leonie, thank you for that. Can you hear me now? Well, hopefully. I see that
Yes.
It says I'm speaking, so not sure what happened, but I got dropped off right at the end of your presentation. So I'll say it again. Great job on your presentation, and having read the report, you guys did a really great job of kind of really summarizing where everybody is looking and what the advantages of a lot of these countries are. But I'm going to talk very, very quickly about some of the things that you need to consider when you're actually thinking about sourcing in different locations outside of China. And so if I can ask Brian to advance the slides here, that would be great. So there's really, if I talk to any sourcing executive, he or she will tell me sourcing is a really difficult job. I have to travel all over the world. I have to find low-cost places to work, and I have to deal with fickle designers and merchandisers who keep changing their mind. Well, that's all true, and that will continue to be true. But for the last 20 years, most sourcing executives have been working in an environment where we've had deflationary costs for apparel. For the last 2 decades, it's been challenging, but at least you could find a cheap place to work and a cheap place to make apparel. And that's all of a sudden changed. And when you take a look at a sourcing executive's job now and think about how the backdrop has changed, and you think about all the things that are also happening simultaneous. Our global economy, we're having issues. We had the Great Recession, as it was called, which we're still recovering from. The challenges in Europe with the euro right now is driving a whole set of uncertainty around the consumer. So do you make a lot or not make a lot? And how do you hedge your bets when you have an uncertain consumer? The rising production costs in China that Leonie just spoke about, and rising production costs everywhere, but because so much sourcing is done in China, it's really evident there. The growing middle class in the East is not something that most Americans and Europeans think too much about, but this great boom of manufacturing that we've shifted to China and to India over the last 20 years has produced 300 million on a purchasing parity basis middle-class people, and those middle-class people are demanding goods from these same factories that we're exporting to the U.S. and to the EU, and so we now have incredible competition coming from these different people that just from a purchasing point of view didn't exist as little as 20 years ago. And then there's the whole idea of green products, and with all the backdrop of demand for raw materials, the push on green and sustainability, and sustainability both in a environmental way but also in a workplace and making sure that the workplaces are good. And then the demand for fast fashion. It's cycles. We went from 4 seasons to 6 seasons for fashion to 8 seasons, and now we have some retailers that are doing a season every 2 or 3 weeks. And so there's an incredible, the sourcing executive has now got to deal with a lot more pressure and a lot more challenges than they did before. And you put the backdrop of the commodity issues in and the prices, the rising price in China, the job just gets a lot harder. So when you think about the forces at work with rebalancing the global apparel, the shifts away from China, the rising costs of raw materials and labor that Leonie spoke about, social unrest. There's been a number of strikes. We just are coming off the end of Chinese New Year right now, and it's still a question of how many people are going to come back from vacation, and are all those factories going to be able to open up? There's a lot of shift that's going on from a social perspective. And then, as I said, with this rising middle class, the shift toward domestic production with the capacity in China, and economic uncertainty given the environment that we're in right now. And from a global perspective, if you take a look at oil costs, and you take a look at cotton and materials, and then concern around inflation and the debt, it also layers on a whole set of things you need to worry about. So, when you start to think about finding the next China, there's a lot of things you need to look at and be challenged about. And it's flashing yellow and red here because you really need to think cautiously about how you source, from the infrastructure to the capacity to capital to regulations. There's a whole set of things that you need to worry about. And we try to distill it down into a few questions that you can ask yourself as you're thinking about it. And but the bottom line is that it can be done. And as Leonie said in her presentation, most prudent sourcing executives believe in having a portfolio approach to sourcing. And I fundamentally believe for at least the next 5 years, there's not going to be this massive move away from China where China is going to drop to 20% of the production, but rather the smart sourcing executives are going to begin to, in a more serious way, look to the other places so that they have a better portfolio approach. So if things continue to inflate in China the way that we believe they will, you'll be in a good position. So it's all about doing your homework, and it's all about knowing the suppliers and the partners, regulations, local customs, and being very, very smart about what are the type of products being produced. Leonie had in her presentation a page that showed how what products were being produced in what countries and where they were really good at things, whether it was T-shirts in Guatemala or whether in ladies' underwear in Sri Lanka. You need to really take a look at the product produced and make sure that you're being smart about it, and then carefully analyze the benefits and risks of what you're doing. But the bottom line here is that it's important for every sourcing executive to begin to build that portfolio approach. So what are the questions that you need to ask yourself when you leave China? Let's start with the first one. What goods are my sourcing? And I spoke a little bit about that. It's very, very important for you to think carefully about what goods you put in what countries. As that slide said that I just mentioned, certain countries have a presence in certain products, and it goes beyond, what are they producing, but what access to raw materials do they have, and also what access to fabric do they have. It's fine for you to think, okay, well, I want to ship some of my my intimates to Sri Lanka. They're really good at that. I want to ship some cotton goods to Bangladesh as long as they're stock items and they're not something I need really fast because the infrastructure's slow there. And, getting stuff to the port, it can be hard. Getting stuff on the boat can be hard. So, but if I have cotton standard items that I want to produce, they have good material there. They have a good supply of cotton, and so it's about matching the good to the location. For example, athletic shoes. There's incredible production of athletic shoes in China, produced particularly in the Dongguan region, but now some of that has moved to Vietnam, and they're starting to become a skill base there. But athletic shoes are one that takes a lot of very specialized skills to actually produce a quality shoe. And so we've seen that move to Vietnam. I wouldn't produce those in Bangladesh because they don't have the skills there to do that. I wouldn't produce leather fancy shoes in Bangladesh either, but if I had cotton goods I wanted to produce there, would definitely be someplace that I would be interested in sourcing. So it's really about matching together the goods with the location to make sure that the skill set, the raw materials, and just the time considerations match up for that good with that location. The second thing is just thinking about the local environment, and do I have to have a local presence there? Do I have a local presence there? It's when you move to a new location, if you're doing small orders and limited production, you don't need to necessarily have a local office there. But as you ramp up and get bigger, what we're finding with most of the customers that we work with is having a local office in the region or somewhere nearby, or a partner that can help you there, is really, really key to doing this. Obviously, using an agent in some of these countries works, but you have to understand that if you're going to use an agent, you're going to be paying probably a 6 to 10% premium, and that's a good thing as a way to get into a market. The question is, from a cost perspective, is that something you want to do on a long-term basis? And so we see many companies go into a new market. Bangladesh is a typical one where they'll use an agent to get in, know that they're paying a little bit more, and then until they get the volume that they need to actually sustain and justify a local office or a presence somewhere nearby, you continue to use that agent. And because you need to stay close to your orders, you need to stay on top of what's happening, and you either need to do it yourself or you need to have a trusted partner to do that. So I think that thinking also carefully about how I'm going to stay close to my orders and on top of things, whether it's my own staff or a partner or an agent or an inspection company or some methodology that you want to use, but you need to think very consciously about that. And you need to think that, okay, I'm doing trial orders right now, I'm testing this market, but if this works, it's going to ramp up, hopefully, and that's the reason why we do this. And if it does, how am I going to support that? So that's the second consideration. The third consideration, the third question you should be asking yourself is quality and cost. And It's really it's challenging enough to chase the cheap needle around. It's another thing to find out that your cheap needle is a bad needle, and chasing cost and ending up saying my T-shirts went from $10 a dozen to $8 a dozen, but they're crummy and they fall apart after 6 washings. You know, that's just not worth it. So really taking a look at the quality of the goods coming out of there, and one of the easiest ways to do that, unless you're the absolute pioneer in a region, is to go into the factory and take a look who's actually manufacturing there right now. And is this a company that's focused on quality goods? You know, that you can't copy their designs, but you certainly can go and see is one of the brands that's known for good goods in that factory. And if they are, it's a good indication that at least somebody else is doing their homework. So it's one thing that you can look at. But test runs and really look at quality, and working with partners like the Bureau Veritases and the SGSs and the Intertest people to actually make sure that you've got a good handle on the quality is really good and really key, because it's a company damaging thing if you find a lower cost place but it ends up being lower quality. The other way to look at this is actually to turn it on its head. And one of the things that we're seeing people start to focus on is, if I can't focus on lower cost, maybe I should be focusing on higher quality so I can actually raise the prices. And I know that's something nobody really wants to do, but we're seeing it, for example, in Central America on jeans, where you're going to pay more in Central America for jeans, but you're going to get faster response times, you're going to get better quality washes, and you're going to be able to work with some of the manufacturers that are down there to get smaller runs and a higher quality of jean that comes out of there. Yeah, you may be paying a little bit more, but it's something that you can actually get the consumer to take a look at and consider a higher price on. And so sometimes it isn't just, can I get lower cost or same cost for the same quality, but maybe I should be taking a look at this and let's jump the quality up to the next level and see if we can't get a premium price for it. And I've visited a number of those factories in Central America making the jeans, and they make some beautiful things. Yeah, you're going to have to charge a premium for it, but depending on what your market is, if you're not a mass market person but you're actually more selective with your market, you may find that that may be a way to think about quality, is to turn it on its head like that. The third consideration is tools and collaboration with trading partners in the region. We're finding that and this is a chance for at least one little shameless plug for TradeCard, which is, you know, obviously we're going to recommend that you think about technology as the way you do this. But whether you do it with a tool like TradeCard or whether you're using EDI and a portal and other things to communicate, you really need to make sure that you're putting in place good communication tools with your vendors, and you're treating your vendors. Obviously, if you've been sourcing in China with the same vendors for a long time, you've got tools in place and you're making that happen. But as you move to these new locations, you need to make sure that you've got the right tools in place. And, you know, particularly as your vendor base grows, you're going to get more and more vendors. You need to have the right tools. And as you'll find, you know, with the challenges we have in sourcing and the pressures we have on cost, if you've got paper in your supply chain and you can't communicate electronically and you can't have good reaction time with your vendors, your ability to squeeze costs out of your supply chain is going to be very, very challenged. So you really need to take a look at how you're going to communicate with these vendors. The good news is that we found in even the remotest regions of Cambodia and Laos and Bangladesh, there is access to technology. You just need to make sure that you've got your vendors trained and you have them hooked in a consistent way as you do the rest of your vendors. But it is doable, but you really need to think about it before you end up with a giant stack of paper in your back office, and when you're looking for an order, you have to sort through that, and that's not going to work in today's modern supply chain. The fifth thing is just more of a general question around what barriers and challenges exist locally. We tend to focus on the price, and if we get the quality right, we can sometimes forget about some of the other things. But with the big focus on green, are there environmental issues? You heard Leonie talk about Bangladesh being one of those countries because of the labor rate. It tends to be labeled a poverty country and poverty wages, and it can be, depending on your brand, someplace that you need to consider. Is this someplace I want to manufacture from a reputation point of view? You can get around those things, and you need to do the right audits and make sure, but you need to look broadly at the social, the technology, the financial, the environmental, what political issues, political instability in a country. Obviously, there's political risk you need to manage, but there's also the idea of strikes, and we've seen it in places like Vietnam where there's been a lot of strikes and where things get shut down. And the really amazing thing about the world in which we're living and working in right now is that every time they raise the wages in China, you find that stuff through Twitter and instant messaging. The people in Bangladesh and Cambodia and all around Vietnam all know what's happening around the world with these labor rates, because everybody has a cell phone, no matter how poor they are. Everybody has this access to this universal technology, and so people around the world are getting information about what's going on, and that's causing some political issues, and with the strikes and things that are going on. So you need to really make sure that as you go in, you're thinking broadly about these things. The other piece is the financial piece, which is in a lot of countries there's it's difficult to get access to capital. And so what we're finding is in places like Turkey, where they make really nice cotton goods, they have good access to cotton, they've got a very mature infrastructure, and it's a good place to work, but you're going to pay a lot for capital. So that cost of capital to the factory actually works its way into the cost of goods eventually. And so you need to take a look as you look at these countries. Are there different financial regulations? Bangladesh, for example, has some pretty arduous financial regulations around making sure that the payment takes place within a certain number of days of the shipment. Otherwise, you need to use a letter of credit. And so we've had to construct different financial programs for Bangladesh to allow you to work in Bangladesh without using a letter of credit. And because of that, if you don't consider that, all of a sudden you may need to get credit that you hadn't thought about. So again, looking more broadly across all of those to figure out if there's other things that you should consider. So those are the 5 questions that you need to answer. And I think that if you really take a look, there is no good alternative for China in a way that could allow you to shift all your goods out, unless you're a small manufacturer. China is going to play an important part of the sourcing that's going to take place in the apparel industry over the next 10 years. But it's going to be a more challenged environment. But as these different countries develop the leadership and the organization, the local investment in technology and facilities, and as they develop, more stable governments and better infrastructure, it's going to allow you to think about other countries and that are going to be as fast and as good quality and as compliant and as transparent as China is, which works really well. But clearly the sourcing executive's job is getting harder. The backdrop of all the change and the rising costs in China, it's going to make us have to work a little harder. But there's still opportunities out there, and we just need to think more broadly. So there you go. Back to you, Leonie.
Thank you very much indeed, Kurt, for some invaluable advice there, and what I'm sure will provide many listeners today with food for thought. We're now going to move on to the question and answer session, and I'm delighted to say that we've already received a number of questions. It's definitely an issue that's touched a nerve. Firstly, I'm going to bring Mike Flanagan into the discussion.
Hi. Hello.
Hello, Mike. You say in your report that China's gaining share, but we're also hearing stories about buyers moving their sourcing. How do you explain the difference?
I think we had a huge boom at the beginning of 2011 of people who got frustrated at the end of 2010 and actually did start trying very hard indeed to move out of China to places like Bangladesh, Indonesia, and Latin America. And I think many of them discovered, not by no means all of them, many of them discovered that they'd gone from one set of problems in China to often rather different problems, but still problems in Bangladesh or wherever. And I think we saw as a result of that by the summer of 2011, and up until really December, people started actually bringing business back. So I think it's not that people have decided forever to stop, to give up going to China, moving out of China. I think people have got great frustrations about the alternatives to China. They either don't quite work, they're actually not as cheap as they thought they might have been, there are all kinds of hidden costs they've discovered, they can't find quite their speciality, the particular products that they want, they're not quite getting the speedy flow of raw materials. And I think they've been frustrated, and I think there is a huge demand out in the world, in places like Bangladesh and Indonesia and Latin America, for a whole pile of improvements in the working environment. And I think we're going to be seeing more and more of this over the next couple of years. And the successful businesses outside China will be those who have somehow managed to provide or at least put customers in touch with this whole list of things that customers wish they could find in Honduras, in Nicaragua, in Indonesia. And if you're not careful, I'll go on for the rest of my life explaining all these things, and we'll be having another survey coming out about what we think they are. But I think it's one of the great problems of the next 12 months is going to be countries around the world responding to the frustrations many buyers have encountered in trying to move out of China.
Thank you. Earlier, I listed some fast-growing sourcing destinations, but where do you think the best place to move to is?
Well, I'm afraid right now, I'm not going to answer the question myself. I'm going to give the answer given by the world's largest garment buyer, which is sourcing intermediary Li & Fung, who, when asked earlier on in the middle of 2011, where's the next China, said China. Now, they believe actually that the west of China is going to become a major area for sourcing. I think actually the place to move to is a different factory in China than the one you've got right now. But I believe that for the next 2 or 3 years, in fact, what most people are going to do, having looked all over the place, having looked at Laos, having looked at Haiti, having looked at Serbia, I think a very large number of people are going to say, well, actually, there's a place just in the next province, the one we're in right now in China, where I've actually found the best place of all. That's why I say that's my view. But there are hundreds of billions of garments a year moving across this industry, and different people will have different kinds of answers.
We're also hearing a lot about countries like Bangladesh being labelled as the next sourcing hotspot, but they're not getting the orders we expected. Why do you think this is?
Well, I think Bangladesh has a very particular problem, which is that we know for certain, because McKinsey did this survey in autumn of 2011, we know for certain that about 90% of the world's buying companies want to move to Bangladesh. And we also know for certain that actually most of the buying directors of most of those companies really think that they're in the process of moving to Bangladesh. But there's a third rather strange thing, which is actually Bangladesh's share during the autumn of 2011 actually fell. And it fell, I believe, it fell partly because its prices grew faster than China's, at least particularly if you're in America. It fell because it's quite dependent on Europe, whose growth slowed. But the biggest problem Bangladesh has at the moment is a real shortage of capacity. It simply doesn't have enough factory space, and it's not able to use that factory space as productively as it likes. It's got a real shortage of manpower. One prominent Bangladeshi garment maker claimed that only 70% of the clothes he could make were being made. It has problems with energy supply, so lines are being closed. And what I believe most importantly of all is that it has very few factory plots, very few spaces for new factories in its export zones. And the government, for reasons that simply astounds me, has handed over the decision about who will get those plots to the garment manufacturers themselves, who've said that they're not prepared to allow non-Bangladeshis to invest, to buy factories in prominent locations. Now, this frankly beggars belief. Europe spends 1.4 billion euros a year in remitting taxes due on importing Bangladeshi clothes. The European taxpayer does that to encourage employment in Bangladesh. And yet, nonetheless, Bangladeshi manufacturers are refusing to build new factories because they're terrified, and they've said this themselves, they're terrified that letting foreigners in will actually put wages up. Now, this is unbelievable, but how much I go on about it, it's a serious problem. The serious problem is Bangladeshis can't at the moment build enough factories, and I think there are ways around that, but I think we're some years away from seeing all that come to proper fruition. Yeah.
Thank you. How do you think countries like Bangladesh and also Indonesia, for example, can actually make themselves more attractive? What can they do?
Well, I think the real answer, and above all in Bangladesh, but it's true of many countries, is quite a long-term one. I mean, the biggest problem most of South Asia has is the kind of infrastructure that the garment industry can't very easily influence. The power supply, the quality of road links to ports, the speed, and let's be honest, the honesty of the customs system, the general reliability of things to come in and come out. And that requires quite a lot of investment by governments, all of whom are very short of money. I mean, South Asian countries have relatively low taxation, governments have relatively little income. So affording big infrastructure projects, even with goodwill, it takes some time. And I think the things they can do to improve that are going to take some years to work. And I think that's common with, if you ask anybody else in the world what the problems are in these countries, the number 1, 2, and 3 is infrastructure, infrastructure, infrastructure.
Thank you. I'm going to move on to one of the questions that's just popped up on the screen in the last minute or so. And it asks, what are the speakers' thoughts on the continuing strengthening of the Chinese currency on future, on sourcing? And what's the likelihood of this ever floating outside the control of the Chinese? And will this not strengthen more and increase pressure on costs?
China has shown itself astonishingly capable of staying in control of this for the last 5 years. I mean, at the very highest level, the Chinese government would sort of like to see the yuan float free, but it's not really prepared to do that immediately. And I think that we can probably be pretty clear that the rate of appreciation of the yuan over the next couple of years is probably going to remain under the control of China, and I think it will be at the rate that China wants to see. That's my view. Now, you know, as many of you can tell from my accent, I don't actually live in the United States, and the pressure for doing something about this is coming mostly from Americans. And if I can just preempt your job for a moment, Leonie, I think I'd like to hear Kurt's view on that more than mine in some ways.
Well, I think that the political view in the United States is that the Chinese currency is woefully underpriced, and there's incredible political pressure to raise it. But I actually agree that the Chinese have done a phenomenal job of keeping control of the currency. With that said, there's beginning to be trading in London soon, and there's already trading in Hong Kong. And it's amazing what the market can do. We've seen what some of these big traders have done to whole countries. So as this trading opens up, and as the the free exchange happens, it's going to get more and more of a challenge. But if you actually look at the renminbi and how it's appreciated over the last few years, people look at just the currency part, but on a cost basis, when you look at labor and inflation and all that, the renminbi is moving up pretty rapidly. And the U.S. politicians just need a whipping boy to yell at, and the Chinese currency is an easy one. But I agree. I see a steady appreciation at a very tempered rate. But it is going to get more expensive, and it is going to be one of the drivers of expense in China. Is going to be the renminbi going up.
Thank you, Kurt. I'd like to stay with you, please, for the next question as well. Won't rising production costs from labour and materials eventually impact areas outside of China? Are we just following the low-cost needle across the globe? And wouldn't it be better to focus on removing production costs altogether from the supply chain?
Well, as I said in the beginning of my presentation, the sourcing executive's job, while it was hard, was in a backdrop of deflating costs. And now as inflation in the largest production country is really taking hold, chasing the low-cost needle is going to get harder and harder. And it's absolutely the smartest thing to do is to step back and say, hey, wait a minute, where can I take other costs out of my supply chain? How can I shrink the number of days that I have in my supply chain? How can I eliminate paper in my supply chain? How can I consolidate shipments so that I can be more efficient with my transportation costs? Should I be, instead of thinking about the low-cost needle, should I be thinking about transportation costs and energy costs, as oil is, you know, that $100 a barrel and up is what we're probably going to be looking at for the next forever. Should I be thinking about manufacturing closer to home and not thinking about the low-cost needle, but rather are jeans from Guatemala easier to get to California than jeans from China? And do they cost a lot less to transport? Or is it time for me to think about, you know, there's a lot of people that are saying it, at least a little, that, you know, for the U.S. anyway, maybe bringing some of that manufacturing back to the U.S. is the way to do it. Now, obviously, it won't be things that are high needle content, high labor content items, but things that are low needle content, and we can layer on some technology to it. We can find ways to produce it in even a high labor cost country like the U.S. and in Europe. So I totally believe that the next generation of sourcing executive is not going to be chasing the cheap needle. It's going to be thinking more holistically about their supply chain and what are the other costs and the other considerations that need to be taken into mind to find the best place to source.
Thank you. You talked earlier also about matching skills and location, but what about technology? Do you think factories in far-reaching places are equipped to handle technology solutions and software? And perhaps you can also elaborate how a provider like TradeCard gets around this problem.
Well, thank you for that. One of the things that what we've realized, and we now have hovering close to 10,000 people using TradeCard right now in over 60 countries. So we're in every sourcing region that you can imagine. And one of the big breakthroughs that happened with the whole internet is cloud-based technology and software as a service that allows you to have applications that run in the cloud that don't run locally on the floor in the factory. And what we found is by delivering cloud-based applications where you don't have to install the software in the factory, as long as you have good access to the internet, and the internet is getting pretty ubiquitous. I mean, we still have issues in some countries with slow response times, but as long as you have access, you can deliver technology, but it requires you to deliver that technology using the newest methodologies, and that new methodology is the cloud-based software as a service. And you know, we were lucky to have built our platform on that when we started in business, and it's allowed us to get into a lot of these low-level, low-technology countries. So yeah, and even in Bangladesh, and we have places in Pakistan where you can, you know, get your TradeCard PO by going to a kiosk in town, and you know, or an internet cafe and printing out your PO. Not what exactly how we'd want them to use it, but hey, as long as they have access to the internet, that's being the key driver of technology right now.
Thank you for that, Kurt. I'm going to hand back to Mike now with another question that's come through. Finding a factory and a country that produces quality goods to spec is one challenge. Finding a country to manufacture in that finding a country to manufacture in that can also decorate those goods as well is a bigger challenge. Do you have any suggestions there?
What you're not really suggesting, I hope, that I'll give you an answer to an individual country, and the answer is no. But I mean, there is an element, I think, that is becoming increasingly common in the questions we get in our consultancy work, and that is the role of the country in which you're marketing the goods, whether it's Europe or the United States or Japan or wherever. I mean, there is still a residuum in these countries of businesses that, although the industry may have left rich countries, are still doing a lot of remediation work. And large swathes of, say, North London have got lots of quite small workshops that are basically there to cope with production foul-ups. And actually, there are skills in those places. They all have quite large groups of people who've moved there from countries that have quite strong production centres, that actually could do decoration and other kinds of enhancement to garments as easily as they're currently drafted in when there's a crisis because a shipment's turned up and it's, you know, the QC was wrong. And I personally think that the use of home countries, the countries you're marketing in, for some of the very downstream ends of the production process may well be one of the ways of somehow getting faster fashion out of parts of Asia that really are just too far away to cope with the demands of the retail business. So that would be my suggestion, is actually to look at and encourage the development of some finishing processes in your own country, or if you're European, in a low-wage country nearby like Romania.
Thank you, and I think we have just time for one more question, and this one comes in, and again I'll direct it at you, Mike. Where can I find details on which commodities have duty-free access to the US and EU, even though they have Chinese raw materials?
Well, it's funny you should ask that question, because if you go online to juststyle.com, and I hope you've got your email address, so we'll send it to you, the Clothes Source Guide to Apparel Trading Regulations is an absolute snip at whatever price that they're promoting it for now, has all that information up to date, even as of January the 1st, 2012. And I hope if you haven't been able to find it by the end of today, I'll personally send you an email telling you precisely how to find it.
Thank you very much. I'm unfortunately going to have to wrap up today's session because we've run out of time, but we do have a couple of outstanding questions. So what we'll try to do is to get them answered, and we'll email the replies over to you. Saying that, it just leaves me to thank Kurt Cavano, CEO of TradeCard, and Mike Flanagan, CEO of Clothes Source, for joining us today, and of course to all of you who've been listening. Just to remind you again, an audio-visual version will be available at www.juststyle.com/webinars, and we will also mail you a link to it. And please keep checking this page for details of more upcoming webinars. Finally, I'd like to say thank you to everyone for taking part today, and goodbye.